It's Friday, the 28th of April, 2023. Welcome to the Fast Five by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, 5 huge stories today to get through in 5 minutes, so we better jump into it. Story number 1, the federal government wants to bring in highly paid permanent skilled workers through an expedited set of visa processing rules. This is part of a major overhaul of the immigration system.
Big changes. Under the proposals outlined yesterday by Home Affairs Minister Claire O'Neil, the federal government wants inbound skilled workers to no longer be bound to their employer, making it much easier for highly paid workers to enter the country and start working. The points test used to select permanent skilled migrants will be dropped. Priority will be given to filling skills gaps. Basically, skilled migrants will be considered based on their long-term economic value. Underpinning the new rules is a 3-tier system. If you're at the top tier, getting paid the most, it'll just be easier to find work in Australia. Now, a major review of the immigration system released yesterday alongside the government's announcements called the system broken, recommended a new visa for care sector workers, an overhaul of the list of in-demand skills, and an increase in the minimum salary required to bring in temporary workers. That will increase from almost $54,000 to $70,000 under the rules. What's behind all this? Well, a couple of things. There's a global war for talent. Australia needs many more cyber experts, for example, more coders, more mathematicians. That's why schools are pushing STEM subjects so hard. But it goes beyond those skills. We need more capable salespeople. We need more tradies. Also, our system is old. It hasn't kept up with the skills needed for 2023. No one was talking about net zero 30 years ago when we instituted this one. So we're upgrading. Massive story for that sector.
It is a huge story, Sean. On to number 2, Japanese beverage giant Kirin Corporations has made a $1.9 billion takeover bid for Blackmores, which has been given the tick of approval by the board and the vitamins company's biggest shareholder, Marcus Blackmore.
The bid of $95 a share, it's a 24% premium to Blackmore's closing share price on Wednesday. Now, one of Australia's first naturopaths, Maurice Blackmore, who is Marcus's father, established the vitamin group back in 1932. It's now the largest in the country. He held it until 1975 when Marcus took over. He only left the company 3 years ago, though he's been a bit of a critic of it ever since. He holds 18% of the stock, so his takeout should be about $342 million. Not bad. Tokyo-listed Kirin owns the Lion beer business in Australia. Think 4X Gold, Corona, Steinlager, Stella Artois, etc. Blackmore's share price jumped 22% yesterday on the news.
Okay, on to story number 3. The $200 billion future fund is changing tack, saying the era of easy money, Sean, is over and that it's shifting to a more stock-picking strategy.
The Future Fund is among the country's biggest investors, and 6 years ago it shifted its share market exposure to low-cost index tracking strategies. Basically, if the share market went up, so too did the money in the Future Fund. But as inflation and interest rates have risen, different parts of the market have benefited, others have struggled. So the Future Fund thinks it's time to change direction and pick winners. The Sovereign Fund will invest in domestic small caps for the first time. Its chief executive, Raphael Arndt, said the Future Fund is now prepared to pay higher fees to access higher performing managers. Given the global tightening in monetary policy, that's a fee he is prepared to say. It's all about active versus passive management, and the Future Fund has gone from passive to active.
Sean, story number 4. It's an interesting one because it has been a brutal month for Tesla shareholders.
Sure has. The electric vehicle manufacturer has shed more than a quarter of its value this month, and the company has fallen below $500 billion in market capitalization. Okay, that's still pretty good. It's still the 10th biggest company in the world. In fact, it's still more than 2.5 times the size of the number 2 car company, Toyota, and 4 times bigger than number 3, Porsche. By the way, BYD, the biggest manufacturer in China, it's now number 4 in the world. Ford and General Motors are 10 and 11 respectively. But I digress, Michael. I got carried away there. Tesla shareholders aren't happy, particularly since it lost $84 billion in value in 5 trading sessions since posting disappointing earnings results last week. Otherwise, on Wall Street, it was Meta Platforms' turn to impress investors. Its share price jumped more than 10% after reporting better results. Earlier in the week, Microsoft and Alphabet did exactly the same thing.
All right, last one. Story number 5, Sean. Britain's competition watchdog has blocked one of the biggest deals in the world this year, Microsoft's $69 billion bid for Activision Blizzard.
In fact, it was going to be the biggest ever deal in the gaming industry, with a tech giant trying to buy the creator of games and the operator of esports leagues. The Competition and Markets Authority in the UK said the deal would harm competition in cloud gaming, though it did provide some hints of how to get the deal through, such as selling the blockbuster title Call of Duty. I reckon if I was buying Activision Blizzard, I'd want to keep Call of Duty. Microsoft said it will appeal the decision. Still a way to go there. European and US regulators haven't handed down their views on the deal yet.
All right, there we go. The top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
It's Friday, the 28th of April, 2023. Remember to hit follow on the podcast. If 5 minutes isn't long enough for you, you can find our longer daily show called Fear and Greed wherever you listen to podcasts. That also comes with a bunch of interviews and things. Today's interview is a fantastic one for investors. Don't forget as well, the Amazon Echo smart speaker range comes with Alexa built in. Simply say, Alexa, play the Fast 5 by Fear and Greed podcast to catch the latest episode. You can grab yours now at amazon.com.au. I'm Michael Thompson, and that was the Fast 5 by Fear and Greed. Have a great day.